What's up, guys? Welcome back to another video. In this video, I'm going to show you guys on how you can trade this simple SMC strategy profitable. So if you're struggling, trying to find a profitable SMC strategy, this video is for you. So let's dive in. So in today's video, I'm going to show you guys the breakout block strategy. It's very simple and easy to trade. So let me show you guys how it looks like. So the first thing we need to do is to identify the direction of the market. So let's assume we have a bullish structure. So say high. So you have something like this, then something like this. So then we have price moving up. So this is how the breakout block model works. The first thing we need to do is to do what? Identify trend of the market. For example, you need to know the direction of the market. So we need to know that we have a break of structure to the upside so that we know the direction of the market. So we need to see a break of structure first to the upside. You get? So when we see the break of structure, we automatically know that this is a buy trade. So now we need to see an inducement. We need to see an inducement. Where is the inducement? This is the inducement here. So this is the inducement. So let me write it. See, inducement. So this is an inducement. So after the inducement, we need price to tap on a supply zone since we have a bullish structure. And where is the supply zone here? We have the supply zone here. So this is the supply zone. So this is how the breakout block model works. First, you identify the break of structure so that we know the direction of the market. Then we must have an inducement before the supply zone. Then we have our entry. So vice versa. Let me give you an example for a bearish scenario. You have something like this. Then this. So this is it. We have our break of structure to the downside, which is here. So then we have our inducement, which is this one here. So the rule one major rule about this strategy is this: you must have an inducement before your trade is valid. So no inducement, no entry. You understand? Because it's inducement that validates that in this case it's a demand zone. This is demand zone. So this is it. So this is entry here. This will be our entry. So this will be our entry. So that's our entry. Very, very simple. That's how the strategy is. Very easy, very simple. So let me give you an example on the chart. So I'm on the GBUSD on the 1 hour time frame. So as you can see, we have a break of structure here. So in this example, we have a break of structure to the upside. What does this break of structure signify? It signifies that we have a bullish continuation to the upside. So what's the next thing to do? We need to identify our inducement. Where's the inducement? The inducement is very, very obvious from here. So this is our inducement. Very, very easy to spot. This is our inducement. Then what's the next thing to do? We need to look for a valid, in this case, supply zone that we can use for our entry. So where would that be? That will be here. So that will be here. So guys, as you can see, trading is more about patience. Trading is more about waiting. So if you're someone who is impatient, you will struggle with trading. Because for example, a lot of traders will have missed out on this opportunity. Although the trade came, although the trade was positive. You understand? If you've entered here and placed your stop loss below here, yeah, you will have gotten your TP. But that wasn't a right trade. You understand? The best thing in trading is to wait and know what you want. And in waiting, you must not be carried away by some temptations and distraction that will come up in the market, because the market will always test you. The market will always test your resolve. Will always see if you really know what you're doing. And if you really know what you are doing, the market will reward you. So the market rewarded us that waited, and we caught the move to the upside. So how do you enter this? Well, you have two ways to enter this. You can either wait for a candle close, a bullish candle close to the upside. So in this case, we have in this case we have a bullish close to the upside, which is here. After this break, this bullish candle close, you can enter there, or you can enter here, stop loss below this zone here, below this candle here. This should be your stop loss. Then your TP will be where? Your TP will be here. But for a more safer entry, let me give you a safer entry. You can go on to the lower time frame, which is, in this case, you will go to the 5 minutes and enter on the 5 minutes. So let me show you guys how that works. So now around the 5 minutes, what do we need to see? We need to look for a change of character in our demand zone here. So where's the change of character here? This is the change of character. So we got the change of character. What does this signify? This signifies a change in market structure. So you can enter this in numerous ways. Since we have a break here, you can enter here because this is the zone that caused the break. So you can put your limit here. You can put your limit here. Then SL below here. Then your TP above the high here. So that's just it, 1:3, very smooth and easy. So there are two entry type you can use to enter your trade, but I want you guys to, but I recommend the second entry for you guys because it's more better, because it gives you the right confirmation. It shows you that the market's about to revise at this particular point. So this is very, very smooth and easy, guys. Smooth and easy, guys. So let's take one more example so that you guys can truly understand this. So this is the second example on USD card. I'm on the 1 hour time frame. So this is how you do it. If you're on the 1 hour, your lower time frame entry will be on the 5 minutes. If you're on the 4 hours, your lower time entry will be on the 15 minutes. If you're on the daily, then lower time frame entry will be on the 2 hours. So that's how it works. So we have an example here, as you can see. We have a break of structure to the downside here. You have a break here. So after the break of structure, what's the next thing to do? We identify what? The inducement, which is here. So guys, don't forget, no inducement, no entry. So if we don't find an inducement, our trade is not valid. So those are the inducements. Yep. So what's the next thing to do? In this case, we'll look for our entry at the demand zone. Which demand zone can we use? Obviously, this one right here. So as you can see in this case, the best thing for us to do should have been to just go to lower time frame and look for an entry, and that's what we're going to do right now. So let's go to the 5 minutes and look for an entry. So yeah, we're on the 5 minutes. So what are we looking for here? We are looking for a change of character. So do we find one? Obviously, yes, we found one here. Found a change of character here. Then what do? We enter our short immediately after we spot a change of character, which is after the candle close here. Then stop loss above this candle here. Then we target this low hanging fruit here. So as you can see, beautiful trade. This is 1:2.5 risk to reward, which is kind of nice and profitable. So that's all for today. See you guys next time. If you have any question or comments, or want to make some inquiries, just leave them in the comment section and like, subscribe.